The Perth Mint is one of the largest mints in the world, and it's interesting to observe how the mint responded to SilverSqueeze. I know it's been a little more than a week, volume has died back down, but it's important to revisit the issue and examine how the mints responded, in particular the Perth Mint. Can you comment on that first and foremost?
Sure. Well, Perth is kind of unique in that we're both a refiner and a mint. And so we actually refine the gold and then mint and fabricate and mint into products, so we can do we play two roles in that space. When a squeeze like that typically happens, or when silver is kind of in the game, it's kind of game on in silver and the price is going up and a lot of interest. But we see two levels of interest. One is on the commercial side. So typically banks, if the physical supply of silver they need for delivery on COMEX futures or in the London markets are under duress, they'll come to us to see if we have supply. And on that front, Perth is sitting on a lot of inventory of large commercial 1,000 ounce bars. So a lot of supply there. But it's in Perth, so there's always a cost to someone to bring that to Europe or the US, less of a cost to Asia. And on the retail side, we have we supply coins and bars, small coins and bars to dealers and sell in Perth, and that came under a lot of pressure. And there were certain items that we ran out of. Typically, Perth takes will do forward sales on those items because they can fabricate it. And on a handful of items, I think they even delayed forward sales temporarily. But as long as we have the silver in supply, we can always fabricate it into product. It's a question of how long it takes and then the shipping to the location required.
An interesting debate that's still ongoing is whether or not the SilverSqueeze quote unquote failed. So on one camp, people said, yes, it did fail because the price didn't move up substantially, the price of silver, that is. On the other hand, people have said, well, regardless of what the intention was to push up the silver price, silver inventory dried up. And can you comment on that? Do we have evidence that inventory, especially from the Perth Mint side, saw either increased demand or a depletion following this increased demand?
Well, it definitely stressed the physical side, as you said. So, silver, there's a natural flow of silver, and there's a large futures market in COMEX in the U.S. and the large London physical local market, and there's a lot of arbitrage back and forth between those markets. When something like this happens, where say the ETF, the Reddit crowd was trying to corner the market, if you will, by buying up SLV, the ETF. Now that's different than GameStop and Hertz from the summer, in that it's not a stock that people, there's a limited supply of the stock. In GameStop, for instance, there's a limited supply of shares, so you can squeeze it if there's no borrow available. In the ETF SLV, basically, market makers can create as much SLV as they want. They can create more shares every day. It's an open-ended fund. So you can't squeeze through the ETF, but the attempt was to squeeze the underlying silver market using the ETF. And because the silver market is just so large underneath it, that was the wrong tool to use. So that it failed in that sense.
Okay, but Kevin, who was buying the ETFs? Because there was debate on Reddit forums as to whether or not the Wall Street Bet crowd that was involved with GameStop was also involved with silver. In fact, they've outright denied on their forums that they've had anything involved with the SilverSqueeze. So who is buying these ETFs, Kevin?
Well, I think maybe it wasn't the whole Reddit crowd, but it was sparked by the Reddit crowd. So I think it was there's a lot of people who use ETFs, like self-directed individual investors use ETFs, and large hedge funds use ETFs. Right. Again, GLD is one of the largest ETFs in the market using gold, and it's primarily institutional volume throughout the day that trades in and out of that product.
Okay. Now here's what I'm wondering: the ETF crowd, the people who bought the ETFs, like you just said, was that the same crowd as the people who also bought the silver coins, physical bars and coins? Or are those two different crowds?
There may be a small overlap in those two circles, but I think a lot of the people who buy the coins and the bars are suspect of the ETFs because they think it's just another financial. They consider that a paper product. I consider futures and derivatives paper, the ETFs actually do represent real gold in a vault. But I think the people who are worried about the failure of the financial system, they want a coin in their apartment, in their house or apartment or their bunker. They don't really want that stock certificate sitting on their desk.
Well, I think you just hit the nail on the head on the key of the story here now, Kevin. Let's just examine the facts here and look at what happened. Let's do some investigating here. We know the fact is, on Sunday night, that night, I remember being here doing interviews. The physical market had pretty much dried up in the sense that several bullion dealers did not even have inventory to sell. They had to either backdate some orders or reject orders altogether. So we do know that there was a crowd pushing up the physical market, or at least buying it up. That we know. We also know, like you said, there was a crowd of people pouring into the paper market, in particular the ETF space, and also futures as well. As you'll see in this chart, the silver futures and the COMEX really spiked up that day. So my question is, were those two crowds of people communicating? Because the notion here is that, well, it's not the Wall Street Bets crowd, right? It's not the Redditors who were pushing up the silver price, but like you said, there might be some of them involved with the silver ETFs. So who was pushing up the silver price, Kevin? I'm really curious.
I think when everyone saw what happened with GameStop and the multiples it traded at based on the Reddit crowd, when they heard they were after silver, everyone pictured a rocket shot up, and so everyone went with whatever tool they had, basically. So if you were a futures trader, you added to your long futures position. If you were trading OTC in London, you took on more physical OTC. And if you're a bar and coin person, you went to your dealer to buy more bars and coins. Now, if you were either a futures trader or an ETF trader, and when silver was up around $30, you were getting in around 30. If you were a coin or bar buyer, you were paying a hefty premium over 30. So when the market reversed and came back down towards 24, 25, 26, that range, if you got in at 30, you took pain. If you got in higher than 30, you took even more pain. But a lot of people though see this as, that was an entry point, and their entry point's a little bit higher or lower. And I think, I don't think everyone who got in at 30 liquidated saying, oh, you know what, it was a failed attempt. A lot of people did, but I think when it came back down, a lot of people say, you know what, I see a long bullish situation for silver, and so I'm going to hang in there.
That was a key point. I mean, you've got two groups of people buying both the physical bars and coins and also the ETFs. But what's more effective in actually moving the spot price?
Well, the market that can move the spot price the most and actually does set the spot price is the futures price on COMEX, the futures activity on COMEX, and the OTC activity that occurs local London. The ETFs are really more of a reaction to that, and then the bars and coins are such a small percentage of that volume that they're just reflective of the price. And again, with the premium they pay relative, they're not price setters. They're basically just taking the price that's offered at the time. But you can't. There's not going to be enough like small coin and bar activity to move the spot price.
So why do you think people were buying the physical bars and coins then? Was that with the intention of squeezing the price up, or did they just hop in on the action?
I think they were popping in on the action. I think basically they saw in the financial markets that this Reddit crowd was pushing the price up, and their tool to invest in silver or bars and coins. So when they saw that, they went out and got some more. And again, some of those people probably hanging on to them because they're long-term believers. If you're buying bars and coins, you're kind of a long-term believer in the asset.
Let's talk about the premiums, because you just brought that up. We saw premiums spike that week. Are they still high for the Perth Mint?
Well, I think again, a lot of supplies were depleted. So Perth Mint supplies coins and bars directly through their website and then through the dealers. And so on the website, the premiums aren't there, but a lot of inventory is not there. But Perth also has an online depository program where basically you can open an online account and then you can get in without a premium as a retail investor. And there's fees along with that, but it's nothing like the premiums you see in the physical coin market.
You're saying that the Perth Mint, being a mint, doesn't charge premiums to the same extent as retailers?
Well, so basically on their website, there will be a minting and there will be fabrication and minting costs. There will be fees to get in, but they're fully disclosed. Those may not, I think those are not typically as high as the premiums you may see for Perth coins redistributed here in the US when they go through a wholesaler and a dealer.
Okay, well, have you been communicating with any of the dealers that you work with? Have they indicated to you that they're going to keep premiums high for the foreseeable future?
I don't know if I think they make that decision on their own. I think we're just a source of supply for them. That's not a decision they make in collaboration with us.
No, but have they, where are you seeing the prices of silver products on these dealerships websites, for example? Have you noticed premiums staying high, and has anyone communicated to you that they could stay high?
I've not heard that communication, and
okay.
I think we'll have to see what happens to silver price and what happens to the supplies, because the premiums are only there because there's more. It's economics 101. There's more demand than supply, and so in that case, a premium will build. And so I think the demand is probably still reasonably high, and it'll be a question of seeing when the supply can fulfill that.
Well, has the Perth Mint indicated that they will increase production to meet this demand, or do they see it dying back down?
Yeah, I think they always are looking to modify their production to where the demand lies. So, for instance, when last spring, when gold bars for delivery along futures were in demand, they could shift to focus on some of those bars. So they do have the ability to shift their production to where the demand lies, but it's not instantaneous. And then there's always a question of changing the output and then shipping that freight cost, and the buyer of that product bears the cost of the shipping. So that's not the first.
I understand. I'm curious to know the Perth Mint's outlook on demand, whether or not they think this heightened demand that we saw last week could remain in the market.
Well, before the pandemic, so basically, let's step back. So in 2019, silver underperformed gold for the year. And then coming into 2020, we had the pandemic, and gold took off as a safe haven asset. So silver was really caught behind. But then middle of 2020, silver really took a run. So by the time you hit August 2020, silver was up over 60% for the year, and I think gold 35%. And then in the fall, as everyone realized the Fed was supporting all markets, and silver and gold as a safe haven asset kind of moved it back burner. Gold traded down, and silver did somewhat, but I think silver still ended up the year, maybe if gold was up 25%, silver was up at least 10% or more, higher than that. So silver had a much better year in 2020, and a lot of that was because even coming into 2020, a lot of people thought there was going to be potential industrial tightness or shortages in the market, and as a GDP ramped up, that would create stress in the silver. And that was even before any of this Reddit crowd talk began. So silver was already kind of well positioned for a run up this year.
Yeah.
I think Reddit made it pop, and then it's come back down. But I think there's still a lot of reasons, for this year to be have a bullish view on silver.
On the physical side, once more, on the bars of coins, are we seeing more demand and interest now for silver products or gold products, particularly at the Perth Mint?
I think we've seen more, relatively speaking, in silver since last fall, and that's true today. So we've seen more demand for silver than for gold. That's not to say it's a substitution, but there is still a demand for gold, but there's definitely heightened demand on the silver side. So
the SilverSqueeze saga didn't really change the narrative in terms of silver demand versus gold, is what you're saying.
It just squeezed harder and faster, I guess.
It escalated what was already going downhill or uphill, basically. Yeah.
Exactly.
All right.
Yeah.
All right.
I mean, you'd like to walk into a squeeze with a glut of products, and that's not where we were. But again, there's plenty of silver. There's plenty of silver in the world. It's just not in the right. It's not always in the right form or location where the demand is.
Well, here's what I'm wondering.
That's
Kevin.
what creates these stress situations.
If demand for silver products has been more popular, we're higher than gold for quite some time now, according to your statement, why did we still have a shortage? The wholesalers, the mints, the dealers, why were they not prepared for this surge?
I think a week before the Reddit like pop, I don't think anyone was talking about it. So I think it caught people by surprise. And I think the dealers and wholesalers try to manage their inventory. It's expensive to carry inventory. So Perth always has a lot of natural inventory just because we're refining the product. And we're creating, we create like blanks for other mints around the world. So we're creating product for even the other mints for their fabrication.
Do you think that what happened with silver could happen with gold as well?
I think it's unlikely just because of the markets are different and there's less industrial use of gold. So I think that's one difference. And
put it this way, suppose all the retail investors rushed into GLD instead of SLV. What would happen to the gold price? Would that do anything at all?
$1 billion worth of silver takes a lot more space and delivery and physical delivery requirements than gold, just due to the price difference.
Kevin, I'm curious just for the Perth Mint, and actually I guess mints in general, if you can comment, do their costs of production change depending on the price? Specifically, let's say if the gold price goes up, would their margins also expand, or are the margins relatively the same regardless of the price?
So for the Perth Mint, the price to produce gold is they basically buy it from the miners.
I imagine they buy the raw material at spot price, and then they produce the physical products, right? Or do they have forward contracts? How does that work?
Yeah, no, I think I'm not integral in that part of their business, but I think they basically buy where like the Dory bars, which is pre-production, are trading, and so they don't take a lot of price risk. Theirs is really the cost of mint, refining it into gold and then fabricating it into products, and those are all kind of, you can anticipate those costs. And the refining cost is very energy extensive, so lower oil prices have helped on the gold fabricating mining costs to date. So we'll be interested to kind of see where oil prices go too. If oil really falls out of fashion and we cut down some of these pipeline projects and fracking and things like that, you could see higher energy prices, which would raise the cost of the production of the gold. Now, that's probably more of a concern if you own a mining stock than if you own if you're where you're going to buy the physical product. It'll raise the cost of production.